Hi everyone. The purpose of this video is to discuss the HHS Provider Relief Funds and the reporting guidelines that we're starting to see come down from the HHS. About a year ago, my partner Chris Sands and I discussed with many of you the Provider Relief Fund and whether or not we thought people should take the funds. Now that we're starting to receive some updates, we thought it was important to get this information out to you as soon as possible. I will caution that this information is subject to change and nothing has been completely finalized yet by the HHS. The majority of this video is going to be talking about the reporting guidelines. The bottom line is we now need to report the use of funds for COVID-19 expenses and the lost revenues attributable to COVID-19. There is a lot of material in this session and I'm not going to read the slides word by word, so I'll hit some key points and I would encourage you to go back and look through the slides later. And please reach out if you have any questions once you do so. Let's first take a step back and look at the Provider Relief Fund. The Provider Relief Fund was first set forth in the CARES Act in March of 2020, and essentially $100 billion was earmarked to help support healthcare providers fighting the COVID-19 pandemic. There have essentially been 3 rounds of funding, Phase 1, Phase 2, and Phase 3. In Phase 2 of funding is when dentists were made eligible to receive Provider Relief Funds. Let's now take a look at the overview of some of the terms and conditions that were set forth. Bottom line here is that the recipient certifies that the payment will only be used to prevent, prepare for, and respond to COVID-19. And the payment is going to reimburse you for healthcare related expenses or lost revenues attributable to COVID-19. You as a recipient have to certify that you will not use a payment to reimburse expenses or losses that have been reimbursed from other sources, such as PPP loans, EIDL loans, etc. You as a recipient will now have to submit reports to the HHS Secretary to document compliance with the conditions laid out. We originally thought the reports would have to be submitted no later than 10 days after the end of each quarter, but that has since changed to an annual reporting requirement. You'll also have to keep record retention and cost documentation. Here's a very important point. The HHS has a 3-year look-back period in which they can audit compliance with the terms and conditions. The recipients have to formally attest to the terms and conditions, basically meaning that they are agreeing that they meet all of the terms and conditions. You should have a written policy acknowledging the terms and conditions, and essentially just have everything documented in some type of compliance program that you are complying with everything set forth. What does Profi 2020 recommend? Number 1, retain your monthly bank statements. Now, as current accounting clients, we have those records on file and you have access to them in your online bank platform. We recommend creating and maintaining a detailed list of all expenses and invoices. Retain proof of payment for expenses paid with your HHS funds. And maintain documentation of all other stimulus funding received, PPP, EIDL. This also applies to any state or local grants that you may have received. We're starting to get a lot of questions. The first of which is, can I keep the funds even if I didn't see COVID-19 patients? Under the guidelines, all patients are presumed to be COVID patients. Dental practices were specifically mentioned in the HHS guidance. Another common question is, what if I didn't formally attest to the terms and conditions? Now, the HHS was very clear on this. If you received a payment from the relief fund and you kept that payment for at least 90 days without contacting HHS regarding remittance of those funds, you are deemed to have accepted all of the terms and conditions. So again, even if you didn't contact HHS or formally attest, keeping the funds more than 90 days, you have essentially acknowledged and accepted the terms and conditions. I got this question as recently as yesterday. Can I return the funds to HHS if I don't want to keep them and I don't want to deal with the red tape of reporting? So currently there's no process in place to return those funds, but word is that HHS is working on a formal process if a recipient wishes to return the funds. Now let's shift into some of the reporting requirements. So we're going to go over the general reporting guidelines. We're going to talk about healthcare related expenses, general and administrative expenses, and the lost revenue calculation. Here's the first major takeaway. If you received more than $10,000 in the aggregate from the HHS, you must register in the Provider Relief Fund portal. We've provided the link to the portal in the email. At present, there is no deadline for registering in the portal. HHS will contact recipients once it's time to actually start reporting documentation. So just to be clear, right now the only thing you can do is register on the Provider Relief Fund portal. You cannot submit any documentation yet. Now, the original reporting deadline was January 15th of 2021, and that has been delayed. The first reporting period was January 1st of 2020 through December 31st of 2020, as compared to the calendar year 2019. The second reporting deadline is July 15th of 2021. Now, since the first reporting deadline was delayed, we do expect the second reporting period to be delayed beyond July 15th. That reporting period will be January 1st of 2021 through June 30th of 2021 as compared to 2019. Now, it's our understanding that recipients that have any leftover funds after reporting based on 2020 calendar year, you are expected to be able to use those leftover funds between January 1st of 2021 to June 30th of 2021. Let's now talk about the multiple tiers of reporting. If you received less than $10,000, there is no obligation to report on the Provider Relief Fund portal. However, the 3-year audit look-back period does still apply. So I would recommend you keep all your documentation, and again, even though you don't have to report it, within 3 years, HHS could come back and audit the proper use of those funds. The second tier is for those that receive funds between $10,000 to $499,999. You will have to report on the portal. And the third tier is for those of you that receive funds greater than $500,000. And we do expect for the third tier funding for the documentation and the amount of reporting to be much more intensive than if you received less than $500,000. Another very important point is that all provider relief funds received are aggregated based on the calendar year. So for example, if you received $300,000 in the first round of funding, and then you received an additional $250,000 in round 2, you're required to follow the reporting requirements as if you received more than $500,000. Now, we've already talked about the income tax implications many times. The funds received from HHS are includable in taxable income. We originally thought that the funds would be a grant, but that has not proven to be the case. All recipients should have received a 1099 for all funds received and retained within the calendar year of 2020. And those 1099s should have been mailed out to you by January 31st of 2021. Even if you did not send your 1099 to Profi, we have accounted for those funds being received through our monthly accounting process of downloading your deposits through your bank accounts. Here's another very important point. For any providers that received more than $750,000, you will be subject to a formal audit. It's called the single audit requirement. And the audit is due within 9 months of the end of the reporting period, which will be September of 2021. Let's now talk about your use of the funds. So there is a multi-step process that you have to go through. Step 1 is looking at COVID-related expenses, and there are 2 categories: healthcare-related expenses and general and administrative expenses. And step 2 is to compute your lost revenue attributable to COVID-19. And there are 3 methods for computing the lost revenue, which we will cover shortly. Let's first look at category 1, healthcare-related expenses. The expenses, number 1, must be COVID-19 related. Now, for your PPE expenses, you're only permitted to use the incremental increase in expense in 2020 due to COVID. So let's look at a quick example. In 2019, your PPE expense was $120,000. In 2020, your PPE expense was $195,000. For HHS reporting requirements, you are only allowed to include the difference, which is $75,000. You cannot use the funds to reimburse expenses or losses that have been reimbursed from other sources or that other sources are obligated to reimburse. So for example, PPP funds used for wages, utilities, rent. Some additional healthcare-related expenses, supplies, PPE, cleaning supplies. Again, you're only allowed to use the incremental increase from 2019. Workforce training and education. Maybe you did some training on how to properly wear the new PPE. Perhaps you put in new protocols and patient flows. So example, new training on greeting patients in the parking lot and the patient flow into the practice and out of the practice after completing treatment. Perhaps you had to implement some new policies related to COVID-19. You could have incurred additional technology costs, such as teledentistry infrastructure or teleworking expenses, although we don't expect many dentists to have anyone that was telecommuting. And lastly, which is most common, any signage related to COVID-19, plexiglass, counter guards, all of those expenses qualify as healthcare related expenses. When looking at any additional equipment purchased, there's really two categories. The first one is if the useful life of the equipment is greater than 12 months, such as filtration systems, HVAC updates, you're only permitted to report the first year depreciation expense for HHS reporting requirements. Now the good news is that depreciation used for HHS does follow the federal depreciation method you used. So for example, if we took Section 179 on a new piece of equipment and expense it all in the first year, then you'd be able to use that entire amount for HHS as well. Any equipment with a useful life less than 12 months, we can take the entire depreciation expense for HHS reporting requirements. Any professional fees you incurred related to COVID-19 compliance. Let's now look at an increased workforce. For an example, maybe you hired additional team members to do temperature checks. Those additional costs would qualify for HHS purposes. Perhaps you spent some additional money on outsourced services. Maybe you increased the frequency of your cleaning and the level of disinfection. Those additional costs incurred would qualify. Here's a very interesting one to talk about. So income taxes paid on the HHS funds. So as I discussed earlier, the HHS funds are includable in your taxable income. HHS is allowing you to include the tax expense on those funds for purposes of HHS reporting. Now to be very clear, this does not mean your tax expense is a deduction on your tax return. The expense only qualifies for HHS reporting. And another key point is any salaries that you report to the HHS, they cannot have been reimbursed by any other sources of stimulus. Let's now move on to category 2, the general and administrative expenses. By definition, these are just expenses incurred in treating confirmed or suspected cases of COVID-19. Expenses incurred to prepare for possible or actual COVID-19 cases. And again, you cannot have been reimbursed by any other sources. As I mentioned earlier, for dental practices, all patients are presumed COVID patients. HHS has provided some flexibility in calculating the incremental increase in your general and administrative expenses. You must follow your current accounting methodology, and you must maintain appropriate records and documentation. Let's now look at some of the different options for computing general and administrative expenses. I'm going to skip over option 1 because I don't know of any of our dental clients that would be using this method. So under option 2, you're essentially looking at your incremental increase in G&A expenses attributable to COVID, similar to the healthcare expenses with the PPE. You must exclude any other sources of assistance or reimbursement. As I mentioned earlier, for increased personnel costs, we're looking at maybe you hired security personnel since your patients are waiting in the parking lot, patient flow or temperature checks. Perhaps you had hazard pay. And lastly, perhaps you had some new equipment or software lease payments that you made that were attributable to COVID-19. Let's now shift over to the lost revenue calculation. One important point here is this is based on cash collections. So again, it's not based on production, it's not based on accrual method of accounting. This is strictly based on cash collections into the practice. And as I mentioned earlier, there are 3 methods to compute the lost revenue. Number 1, simply take the difference between 2019 and 2020 actual collections. Option 2, for all of our dentists, we would not be using this method, so we'll skip over option 2. And then option 3 is basically any reasonable method of estimating lost revenue. Now for all of our dental clients, we will be using option number 1. So for example, if your 2020 actual collections were $2 million and your 2019 actual collections was $2,500,000, then your lost revenue is a difference of $500,000. Here's a very interesting twist that we've learned is we have to report the income from patient revenues. All recipients need to be prepared to submit this data to HHS for 2020. So the first reporting requirement is the revenue calculation by payer mix. So commercial insurance, self-pay, others such as copays, deductibles, co-insurance. Now the HHS has not yet issued guidance for any recipients that are unable to provide this breakout. However, I do expect all of our dental clients to be able to provide this breakout. And the income from patient revenues is supposed to be reported quarterly. You also have to report any other assistance received in 2020. So any COVID-19 relief, so PPP loans, EIDL loans, any other state or local grants or loans. I know in California, there's several counties that did offer some type of assistance. Another very interesting portion is interest earned. So let's say, for example, you got $200,000 of HHS funds and you put that in an interest-bearing account. The interest earned on those funds has to be reported to the HHS. Seems like a very minute thing, but that's what the HHS is telling us. There are also some non-financial data reporting requirements related to personnel. So examples, number of full-time equivalent employees, terminations, new hires, number of part-time employees. It's essentially the data that you're required to provide for your PPP application and forgiveness. There's also some patient metric data reporting, number of in-person visits, and also teledentistry visits. So look, I know that was a lot of information, and there's still information to be disseminated from the HHS. So I want to give you a few key takeaways. Number one, if you receive more than $10,000 from HHS Provider Relief Fund, you have to go out and register for the Provider Relief Fund portal. We've provided the portal link in the email attached. Number two, if you receive multiple rounds of funding, those amounts have to be added together in order to determine your reporting requirements. Number three, first, we need to look at COVID-related expenses, healthcare-related expenses, and general and administrative expenses. And again, you're only allowed to use an incremental increase in expenses when comparing 2020 versus 2019. The next step, you have to report your lost revenue. And we'll be doing that by looking at 2020 collections versus 2019 collections. Now, let me take you through a very quick example because this is a super important point to understand. Let's say, for example, that you received $300,000 from the Provider Relief Fund. And when computing your COVID-related expenses, that amounted to $150,000. So $300,000 of funds received, less an additional $150,000 of expenses, means there's $150,000 left. Next, you compute your lost revenue. Let's say that in 2020, you recovered fully and your collections were more in 2020 than they were in 2019. You now have a gap of $150,000. That money, from what we're understanding, will need to be repaid to the HHS. This is one of the reasons a year ago, Chris and I warned people to be very cautious in accepting the money because of the unknown terms and conditions. So in closing, there's no way to sugarcoat it. The reporting requirement is going to be lengthy, it's going to be complex, and we're happy to assist you. If you'd like to engage with us for a special project for some assistance, please reach out to your accounting manager.